Hi there, welcome to Nepi Invest. 1 week ago, I started a new series of videos discussing why I bought into companies. So I thought it'd be a good idea to share the buy signals I use to make a decision to buy into particular companies. The first video I did was on Costa Group, and I did say that the next video I'll do in the series would be on BlueScope Steel. I haven't quite done that video yet, but it can wait because not only did I buy into BlueScope Steel in August 2020, I've recently sold out, so that story can wait. I've just decided to do this video, why I bought Kathmandu, because this was a recent purchase and it's fresh in my mind. So in this video, I'm going to discuss the signals I used to take a position into this company. In the past, I have been a buy and hold sort of investor, but my investing strategy has changed over the last few years, where I now use technical and fundamental signals to buy into companies. And ideally, I like these technical and fundamental signals to align. And with Costa Group, if you have a look at that video, that was a situation where we had alignment of technical and fundamental signals, and Kathmandu seems like it's on the same path. So when I talk about technical signals, I'm talking about moving averages. So I want moving averages that are going up and the share price above 3 moving averages that I use, which is the 10, 20, and 50-day moving averages. I would like to see a higher high, higher low sort of pattern, and that suggests that there is a new trend starting to develop. And also, I'd like to see a breakout of a pattern on high volume. Fundamental signals I look for include profit and earnings upgrades, trading updates, and financial reports. So, for instance, Appendix 4Cs, half yearlies, and yearlies. And within those reports, I'd like to see some positive sentiment by the management, or results that exceed expectations, or when management give out guidance that is greater than previous guidance. So those are the types of technical and fundamental signals I am looking for every single day on the market. The first thing I want to show you is the 6-month daily chart to this 22nd of March. Now you might say that's just an arbitrary position or date, but it's actually not, because Kathmandu released that half-yearly report on the 23rd of March, which is a little bit different from most of the other companies on the ASX who report in February or August. So they're a little bit different. And I actually like those companies who report separate from the rest of the ASX, because you can really focus on their financial reports. And that's exactly what I did with Kathmandu. But when you look at this chart, there is no discernible trend in the share price. So there's no actually reason to buy into Kathmandu at this point or during this 6-month period. You can see that with the share price movements, nothing exciting there. Even with the volume, no peaks or spikes in volume. In fact, you could argue over the last last month of this chart, the share price looked like it was actually heading down. So what happened when they released their half-year report on the 23rd of March? I'll show you that in the next slide. This is a chart of Kathmandu which includes when they released a half-year report and the 8 subsequent trading days after. I do sometimes like to see how the market responds on subsequent days after a company releases a significant report like the half-yearly or Appendix 4C. And what I see here is very important. So they released the half-yearly on the 23rd of March, and the share price increased by 9%. And the other important thing here is we did see quite a bit of volume coming into the market for Kathmandu. But just as important as the share price action and volume on the day they released the half-yearly was subsequent trading on the next 2 weeks. We actually saw the share price go sideways. And that's very important, because there was no selling into the strength of the share price increase in Kathmandu. So why is that important? Well, that just tells you that all the people who bought in at a higher price during the past 6 months weren't selling into this announcement. And that's actually really important, because all that selling could actually send the share price down. And we see that quite often when the share price increases, when to a point where all these people who bought in at that price in the past see that opportunity to sell out of the dog stock, and they take that opportunity and sell. And if there's no buying, that will send the share price down. And we don't see that here. With the share price going sideways, tells me there's a lot of strength in that movement that we saw when Kathmandu released the half yearly and the share price rose 9%. My one concern moving forward from this point was a lot of overhang in this circle period. And what I mean by overhang is a lot of people who bought in at the share price, say during November of last year, $1.30 or $1.35, were wanting to get out of owning this company. And as the share price was going up, they were seeing their opportunity. And that's actually resistance. And that's why sometimes a share price has a hard time moving through levels of resistance. So my one concern with Kathmandu was how it was going to handle moving through the range between $1.25 and $1.35. If it could move through that range successfully, I would take a position in it. And here we have the updated chart of Kathmandu to the end of closing on the 7th of May 2021. And you can see from the time they released that half-year report on the 23rd of March, right here, you can just see what's happened to the share price since then. A lot of strength, a new developing uptrend that has shown really good movement in the share price. So my main concern was that overhang in holders who bought in the past between about $1.25 and $1.35. And we did see the share price of Kathmandu move through that. It took about a month, but it did move through that. So if we draw a line at the top of that range right there, that was the position or the price I would buy into Kathmandu. Because if it went higher than that, that would show me there was a lot of strength in the share price moving up. We might see an acceleration in increasing the share price. And we exactly have seen that, particularly on the last 2 trading days of the week. Now, volume hasn't been all that great, but that's not the big thing here, because the big volume was on the day they released the half yearly, and we've just seen that strength continue. And in fact, we can draw an uptrend. So that black line I've just put in there is the uptrend line for Kathmandu right now. So I've taken a position in Kathmandu because of 2 signals. A fundamental signal when they released the half-yearly report, which the market liked, and that's the most important thing. The market liked it. And because I liked the half-yearly report as well, we had 2 real good signals there. The market liked it, I liked it, and then I was just waiting for a technical signal. And received that technical signal when the share price went above $1.35. And that was my buy price with Kathmandu. And at this point in time, unless I get a sell signal, I'll keep on holding this company. So you might be asking me, well, that's all good and fine, but what about the outlook for Kathmandu over the next few years? Well, it seems like Rip Curl, and they bought Rip Curl a year or 2 years ago, is performing really well. It's only Kathmandu which has been forming, we'll say, fairly weakly, but they do expect management that Kathmandu will start performing better as travel opens up around the world and in Australia. Tourists and Australians who will eventually be traveling overseas will start to buy or go to Kathmandu stores and buy their products. And from personal experience, the only time I've gone into a Kathmandu store was when I was going overseas in the winter months and I needed some warm clothing. So there is that potential that as travel opens up, we will see Kathmandu performance improve substantially. So in a way, this is the last recovery story that is happening right now. And this is the reason why we're seeing a really good increase in the share price since they released their half yearly. I did mention in my previous video that the next video I'll do on this series would be on BlueScope. So at this point in time, there is a chance BlueScope won't be the next one, because I've also taken another position in a company on the ASX recently, and that was with Bravura. So I might do a video on that. And BlueScope can wait, because the story in BlueScope won't change, because I've already bought and sold out of that company. And the question is, did I sell too early? Because steel prices keep going up, although I did read today they are concerned about the bubble in steel prices in the United States. So there is a possibility that bubble might burst very soon, although you never know how long a bubble can last. So I'll eventually do why I bought and sold out of BlueScope and discuss whether I did sell too early. Maybe I'm waiting until the share price really decreases for BlueScope so I don't have to really answer that last bit. So I hope you join me when I discuss why I bought and sold BlueScope. Just look out for that in the next few weeks. That is all I've got on this video of why I bought into Kathmandu. So I use fundamental and technical skills to make my decision. If you are a Kathmandu shareholder or you think I've made the complete wrong decision, make sure you leave a comment in the comment section, and any comments you do leave, I'll try to answer as soon as possible. Otherwise, I'm not a financial advisor or any sort of expert or professional expert anyway. So if you do need to seek professional advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Talk to you later. Bye.